Why is Dad's music so loud?
I don't know.
No, he's already talked about this.
They wanna knock me down, but somehow I just stay up.
What are you doing?
Dancing.
That's not dancing.
To me,
Whoa, why are you so happy?
rich, bitch. I can't say that, but yes, we are rich. You can get your Tesla. You can go to Howard. You can get that truck.
Other truck?
Yes, fact. I just need to do one more trade. All right, close the door. Get out.
That black boy joint might do my dance on me.
Get out.
Lost all their money again.
They wanna knock me down, but somehow I just stay up. Look.
Futures trading, what is it and why are people talking about it again? I have some tips.
Full hat theories.
So go along with me. According to my YouTube analytics, people are interested in finance again because the market has been in a nice little bull run, aka recovery, after more than a year and a half of dumping. So people are seeing an opportunity to make money again. And when there's an opportunity to make money again, best believe the froos, who are like roaches who are just seeking for food underneath the refrigerator, will come out of all the crevices and start selling you something again. Or I'm just tripping and people are just all of a sudden interested in futures trading. If you're curious what futures are, well, it allows an investor, but mostly traders, to speculate on the price of a financial instrument or commodity and capitalize from it, i.e. the S&P 500, Dow Jones, NASDAQ, gold, wheat, corn, and etc. It's not like options, and I know a lot of people get confused when they hear the word contract, but you don't have to worry about the Greeks, expiration, etc. like you do with options trading. The best way I can describe futures trading is essentially just like Forex trading, but instead of pips, you're using ticks, and instead of foreign currency, you're trading commodities and instruments. So with that out of the way, let's get into why I am making this specific video.
Hi, I'll be right with you, sir.
If you are new, welcome to my humble little channel. My name is Mark, and I would love for you to subscribe because according to my analytics, 75% of you haven't subscribed. So help a brother out, please. So today's video, I want to give you an honest opinion and my thoughts on trading futures with other people's money. You see, you will hear a lot of these futures traders that will say, I'm a futures trader and I trade other people's money. And I currently have a 50K, 100K, or 200K account that I trade out of. A prop firm is essentially a company that trades on behalf of their clients. So basically, prop firms hire talented traders to trade other people's money, and then they split it with a trader, whether it's 60-40, 80-20, or in today's case, we're going to use Apex, which is 90-10, meaning 90% is yours, 10% is a prop firm. There are a ton of prop firms such as One-Up Trader, Top Step, Earn to Trade, and so on, each with their own rules and regulations. It always sounds sexy and cool to say, I am a funded trader. But let's dive into the truth behind these prop firms and how it actually works and how you actually get funded and whether or not it is a scam. So first, let's talk about the positives because there are some positives. So here are the pros.
Okay, let's ride.
For a low barrier of entry, you can practice futures and feel like there is some risk there and a goal to meet, unlike paper trading. In this video, we're going to use the Apex Trader Funding as our prop firm. Apex has been a prop firm that has been establishing its name for itself for its massively cheap, discounted evaluation programs because they always have these crazy ass discount codes for like 80% off, 90% off, which can get you started for as low as $37 a month, which gives you live data and a licensing key to NinjaTrader or TraderVate, which you can use to trade off of on TradingView. That's a perk if you're a Mac user like myself. Most futures traders use NinjaTrader, however, and I know you may ask why not use E-Trade or Thinkorswim or Schwab, and it has a lot to do with the margin requirements, which I'm not going to get into in this video. There are a ton of YouTube videos out there that can break down on how to set up your NinjaTrader or why NinjaTrader is the best platform to trade futures on, but it's not going to happen in this video, so do your own due diligence when it comes to that. On Apex, you have multiple types of evaluations to sign up, and it ultimately comes down to how big you want your account to be and how much your trailing stop you want to have. Whether you want a static stop or a trailing stop, you have all the options. These matter, and I encourage you to learn what a trailing stop means and how each prop firm runs their trailing stop, because each one of these are different. So don't say I didn't warn you, all right? Just saying. So for around $37 with a discount code, you can get an opportunity to practice futures trading with some stakes, which simulates real money in a certain way. But this route is better than depositing $1,500 into a real account and losing it in your first trade while you're practicing. So essentially, it's better losing $37 and failing the evaluation versus losing $1,500 of your own money. Plus, did I mention that you get the license key and the data is included within that $37, which is a win overall because you do have to pay for data, live data, as well as the trading platform like NinjaTrader. I paid $997 lifetime for the NinjaTrader platform, which also gives me a discount per contract. But don't do that unless you think you really want to go this route of trying to become a futures trader. So that's essentially the pros. Now let's talk about the cons, because there are some cons. Whatever account you sign up for the evaluation, you need to pay attention to the contract size and the drawdown. The easiest way to describe this is like this. If you sign up for the $25,000 account, which costs around $37, your drawdown is $1,500 with a trailing stop of $1,500. That means you cannot fall below $48,500, otherwise you failed. But let's say you make $2K the first day trading. Now your account is up at $52,000. You would think that now you have a buffer of at least $3,500, but that's not how this works. It's a trailing stop. So now you can't fall below $50,500. And if you fall below that, you are done. You're cut off. You failed. You got to pay to reset your account, which is usually more than a discounted eval. But here's a cheat code for you. Just cancel and start over with a new email address to get a discount. Because it just doesn't make sense to pay for the reset, which is typically a lot more than what you paid for the account. So it's just easier to just start fresh and save the money. So this is essentially how this whole futures trading works. But here are a few things, and I want to point out some facts that a lot of people seem to ignore. The easiest part of joining a prop firm really is passing the evaluation. I've passed many of them. They're easy. They really are. For the most part, as long as you stick to the rules, hey, just be cognizant of the $1,500 drawdown or whatever account that you start. Just pay attention to the drawdown. But like I said, each company has its own rules and regulations how the drawdown works. For example, there's a good chance you could make $5,000 a day and then you lose $2,000. Well, they actually work off that drawdown off of that $5,000 that you made. So it's whatever the high amount is that you made for the day is where the drawdown will move towards, if that makes sense. Just seriously read the fine print. But here's the other thing, and you will hear a lot of people who say, I have a $50,000 account, I have a $100,000 account. You do not have that large amount of an account. And what I mean is this. The reality is that once you do pass the evaluation, which I said was the easy part, and then you get the PA account, which you have to sign contracts and etc., you don't actually have $50,000 to play with. You only have whatever the drawdown is, just like in the eval. In the eval, when you get the $25,000 account, you're not really buying a $25,000 account. Your money will show us $25,000, but they will cut you off immediately when you drop below that $1,500 mark. So the best way to look at this is, what is a drawdown? That's the actual amount that you have to play with. And that applies to the PA account as well. The PA account is what you get once you actually pass the evaluation. You get a notification like I just stated right here, and then you sign up. Once you sign up, that's a complete different fee. So although you sign up for the eval that says lifetime for $37 a month, that's if you suck and you don't complete the evaluation. Every month you will get charged $37 a month. But once you pass the eval, you cancel the $37 a month application and you sign a whole brand new contract for the PA, meaning you're live. So here's the thing about the live. This is what used to always bother me. A lot of people assume that once you pass the evaluation, you're getting real money. You're actually not. You're still trading in a sim account. And Apex even says that. You just have to dig through the FAQ where they specifically state that you are trading a sim account for a long period of time until they feel and realize that, hey, you have a certain trend or a certain way that you trade and you're profitable. Then they will reach out to you and they will give you a real account. Now, imagine if you get really proficient at passing evals. If you can pass the eval, there's a good chance that you'll be able to be profitable with your own money. So you have to decide whether or not you want to go the prop firm route, or if you'd rather go use your own money and deposit $1,500 and start trading off of that. Prop firms make money. They make money off of the subscription service, which again, once you pass the eval on Apex, for example, you have two options: the $105 a month version, which you pay every single month, or you can pay a one-time fee of $150, and that will give you a lifetime access for up to 10 years. After that, pay like a penny a month or something like that. But you would think that, hey, I would just go with the $150 a month. Well, again, these prop firms, they make money by you losing. Historically, we already know 95% of full-time day traders fail. So there's only 5% that are actually successful at this. And those 5% are most likely, majority of them, I would say the 4.5% work on Wall Street, work with a legitimate company. So with these prop firms, there was this great video that I watched. It would break down exactly how these prop firms make money. I'm gonna put the description below, but you can look. In the end of the day, realistically, it's less than 2% actually are able to do this long term with these prop firms. So I'll repeat this again. Passing the eval is relatively easy. Keeping your actual active traded funded account is the hard part, because they have a lot of stipulations, and within those stipulations, they are set for you to fail. Now, when you look at all these prop firms, they always have this very attractive marketing tactics on a website, like the first $25,000 of your money that you make is 100% yours, and then after that, it's 90-10%. But here's the thing, if you look and read the fine print, especially once you pass the eval, they send you a letter saying, congratulations, you passed, sign this contract, you have 12 hours to do it, otherwise you basically relinquish it and you failed, right? But I took some notes here, and I want to go over some of the things that I found here on Apex, and I want you to listen, because I'm going to read this verbatim. So once you are profitable and you make money, you are able to withdraw twice a month, but you have to trade a minimum of 10 days and actually be profitable to be able to withdraw money. So in the fine details, it gives you an example. Is here. Example, in a $50,000 account, if your balance reaches $52,000, you cannot request a payout. Your balance must be at least $52,600 in order to request your first payout. If you have a $50,000 account and the balance reaches the minimum required balance of $52,600 to request a payout, you can request $2,000 payout, leaving your balance left at $50,600. Just keep in mind, your balance cannot go below $50,100 in example without failing the account. So you are able to take out that amount, but you would leave yourself with only $500 in a drawdown room. Most companies only allow you to withdraw the minimum amount. Apex does not. So if that makes sense right there, hopefully that makes sense for you. The maximum withdrawal each payout period, twice monthly amount, depends on your account size. So here are the other catches to this. If you have a $25,000 account, the max that you can pull out is $1,500. If you have a $50K account, max that you can pull out is $2,000. If you have a $75,000 account, $2,250. $100,000 account, $2,500. $150,000 account, $2,750, and the list goes on. This is for the first 3 months. After that, you should be able to pull out whatever you want. So they say. But here's the thing. The whole goal is within that 3 months, you should most likely fail at one point or make a mistake or go below the drawdown, and next thing you know, you're kicked out. So you really have to pay attention to detail and be cognizant of exactly what's going on in your account, because they will knock you out. For example, I passed before. I made good money within my futures account, my prop firm. I was excited. I was about to get paid out. I made the crucial mistake of falling below the account by 50 cents because I wasn't considering the fees that they attached to it. And because of that, I automatically lost my prop firm account. So I no longer was a funded trader, and I never got paid out at all, because they keep all of your money afterwards. Even the money that you make, it doesn't matter, they keep it. Because remember, for the first several months, you're just trading sim money. Even though you think you're trading real people's money, it's still simulation money. And that's how they are able to keep their company profitable, because you're paying out the people who actually make the money. Because again, minimum you can pull out is 500, maximum is usually 2,000. So how do they pay these people? They pay these people from other people who are failing in their subscription services. That's how they pay out the people. And here's exactly what Apex says when it comes to your performance account, your PA account. It says, we use live data for performance accounts. Initially they are in sim, but you still get paid the same way. This is because many traders may blow their performance account quickly. So this is done to protect the company and as you as a customer. Once you see the consistency, we copy the trades via API in a prop account. Once you see long-term consistency, you are placed into a live prop account. So just because you pass the eval does not mean you actually are trading with real money. Another catch here sometimes is you cannot trade based on news. Even states here specifically on their website, trade during the news, your normal trading strategy. We do not allow news trading strategies or news directional or multi-directional news trades of any kind. These are prohibited. Hence, straddles, strangles, or any type of news trading is prohibited and considered high risk and the pursuit of lucky windfalls that can place funds at high risk and are not accepted. At no time can a trader be both long and short in their account, nor multiple accounts, nor in the arrangement with other traders. This results in immediate closure of your accounts and forfeiture of accounts and funds. Then here's another one that's kind of, I think, crazy. But it says traders understand that a company is seeking to fund and pay out traders who follow consistent trading plan in size, stops, and targets. That means not trading max contracts on one trade, seeking lucky windfalls while trading micros the rest of the time, not consistently changing size, not dollar cost averaging, not doing high frequency trading, and being consistent in the trading plan, including your entries, stops, and take profit. Trader funding and paid funded is designed to be a long-term relationship of consistency and steady growth for both parties, aka the goal is for you to lose so they can make money. That's right, you cannot change up your trading strategy. So apparently, if you trade 3 contracts and you take, 10 ticks, do that consistently. Do not switch it up. Do not add 5 contracts and then decide to do 15 because that can automatically make you lose. And now once again, you're starting from the beginning. So the question is this, after listening to everything what I said, are prop firms a scam? And the answer is no, they're not a scam. They just make it incredibly hard for you to be a consistent, profitable trader using other people's money. And even using other people's money, you're really not using other people's money until you have shown a trend as a long-term trader to be profitable, where only a few traders will then be reached out where they can trade real people's money. Until then, you're basically just trading sim, either blowing your account or staying consistent and getting paid out from other people who have blown their account. So it's not a scam. They just make it hard for you to be a consistent trader and to do this long term using other people's money. So my name is Mark. Hopefully this makes sense. Let me know what you think. Did you enjoy this video? Did it help you? Did you learn something brand new? If you did, make sure you comment below and of course give me a thumbs up. And if you're brand new, subscribe. I got some more good interviews dropping here soon, so stay tuned. Until next time, my name is Mark. My name is Mark. You are watching Uncultured Currency. See you next time.
Okay. I just got cultured.